All right, we're back. Money, as we know, it is being reinvented from DeFi to CBDCs. The rules are changing fast. And today, Andres cuts through that noise to reveal what's next. And he will show how blockchain isn't just shifting money, it is rewriting the finance itself. So, welcome on stage, Decoding the Future of Finance. Andres, the stage is yours.
Okay, thank you. Thank you for being here. So, yeah, as you mentioned, today we are going to talk about the finance specifically in the field of blockchain. How the blockchain has all this advancement in order to get new services in finance and all of this stuff that goes around the world. So, for a start, I would like to present my presentation. Let me know if you can see it. Uh, okay, let me share. Okay, are you able to see my presentation,
Yes,
right?
thank you, Andres.
Okay,
Perfect.
okay, excellent. So today we are going to talk about the reshaping the future of finance. I put something, yeah, in little that it says money revolution day or evolution day. So why is that? Because blockchain has come here to change the way that we see money. Uh, on this case, what we are going to see today is I like to start my talks with one question, rhetorical questions that um, everyone could think about that. So when was the last time you made a financial transaction without a traditional bank, and did you trust it? This is kind of a rhetorical questions. I think that that every of you have had this question before, because on the past, I mean, our grandfathers, our parents, they knew a total different world. They knew the banks, they knew everything working. That if you want to borrow some money, you need to go to the bank. So this is changing right now, and that's the reason of that question. So our agenda today define how the new services of blockchain are going to change that. For example, traditional finance versus decentralized finance. Uh, that's something that we are going to see. The bankless economy. That's what means DeFi. So the other part of the agenda is CBDCs. So governments wants to be part of this movement. They are not going to be a part. So they wants to have this into their policies. Yeah. So the other thing is tokenomics. What's tokenomics is how all of these are going to be regulated or are going to have a governance. Yeah. The other is stable coins. Stable coins is a way to protect against volatility of all cryptocurrencies. You know that the most of cryptocurrencies all time are up and down, yeah. But the stable coins, that's the reason for this name, are stables because they attach to one strong currency and they don't have this volatility. And for end that this talk is, we're going to talk about blockchain's impact. Yeah. So what is like a summary what we are talking here, and what is beyond that blockchain is not just Bitcoin. Yeah. So let's start with the first point of the agenda. So DeFi uh, is decentralized finance. Yeah. what is the question here? What would it take for you to trust a financial system with no central authority? This is a very important point here, because with decentralized finance, you don't need a bank to trust. You don't need a centralized institution to trust in order, for example, to borrow money, yeah, or to ask for other financial services. This is what this is about. So when we talk about DeFi, decentralized finance, we say that the blockchain system eliminate banks and intermediaries by using self-executed smart contracts. What are smart contracts? For those who doesn't know what smart contracts are, something like piece of codes that automatize something, yeah, in blockchain. So you can elaborate a smart contract for anything, for finance, for insurance, for any topic, for any domain. So that smart contract is like code, yeah, it's like programming, but logic in blockchain. So uh, when we talk about decentralized finance, we talk about that it enables permissionless lending, trading, and yield farming. So you don't need, as I talked before, any centralized institution to do that. Is is something like you trust in the network. You trust in blockchain to do that kind of things. So there are some questions when we talk about the centralized finance versus Bitcoin. Okay, Bitcoin uh, is like digital gold. Okay, so when we talk about Bitcoin, is the most strongest cryptocurrency that we have now in the market, but it is managed like a store value. Yeah, when we talk about decentralized finance, I mean DeFi, yeah, we recreate the traditional financial services and we create new ones in a totally new operation way. So the other thing is that Bitcoin has no smart contracts. It is just aimed to simple transfer. On the contrary, the centralized finance has to do with complex logic via smart contracts. As I told you before, smart contracts are programs, yeah, are piece of codes. So Bitcoin have limited programmability, is focused on security, and is focused on store value. So the centralized finance is built on programmable chains. Uh, here we have an analogy of how this works. For example, you can imagine DeFi like a machine, yeah, a vending machine for financial services. You deposit your crypto, any crypto, yeah, and you start to think about that with that crypto that you deposit, you can earn interest. You can swap that crypto by another cryptos. So that kind of financial services, you can have it instantly. Yeah, you can have it immediately. You don't have to wait as in the bank that you need to ask for an account and ask for all the protocol of banking, but it is faster. So that promotes inclusion too. So if you want to research more about what decentralized finance tokens are now in the market, so we can have some of them. This in TradingView, you can find several of the coins that we have in decentralized finance. For example, there are some like Abre, Uniswap, Hedera. Yeah, so there are several tokens. Some of them are more capitalized, others not. Others are totally new. But the purpose of these decentralized finance tokens are all of these that we were talking about. So when the next time you hear about this, you know that decentralized finance tokens has to do with this, has to do with with new services in finance that are totally different for banking and that are decentralized and doesn't need any intermediates. Okay, so some key concepts just to to remind: decentralized finance are based on smart contracts. Smart contracts are self-executing code. Are Decentralized finance are has to do with decentralization because all the blockchain needs decentralization. That's the concept. That's the base of blockchain. Are permissionless. Okay, anyone with a crypto wallet and internet connection can access DeFi services. It's totally opposite to banking because in banking, you need to have some requirements in order to open accounts, to have I don't know, to have lendings or something, and the centralized finance are interoperability. Yeah, has for example, many of the DeFi apps are composable and can combine it with complex systems. Yeah, so it's not like they are apart. They can interoperate with other systems. Some common DeFi applications are, for example, for lending. If you need something for lending and borrowing, there are some platforms like Ape, Compound, decentralized exchanges, for example, Uniswap, SushiSwap. Do you remember that those tokens are on TradingView in the past presentation that I showed you? So yeah, Uniswap is just to peer-to-peer, yeah, peer-to-peer crypto trading, yeah, and there are other ones. You can figure out and by yourself what other DeFi applications can you have, yeah. So there are DeFi applications for insurance, for yield farming, for stable coins, for derivatives, anywhere. Advantages of have this versus risk. So pros are open and global access. The cons are probably the smart contracts could have bugs or vulnerabilities. So this is where it is important that the programmers that do those smart contracts have a very good quality of their code. So pros are lower cost because no middlemen, and cons are the regulatory, yeah, uncertainty for governments. So pros are transparent, and cons is the complexity and lack of user protections because the rules, the policies of governments are not regulated this in a good way, so they are on a step behind. So let's start with with the next topic. The next topic is CBDC. So when we talk about this, is that how the government are going to be included in those in these topics. I mean, in blockchain. When we talk about CBDCs, so is like central bank digital currency. That stands for that. So if your country needs to be included here, he need to create a digital currency, the something to replace the cash. Yeah. So here comes the questions: would you replace your cash, yeah, by something digital? Yeah, that depends. Yeah, because there are pros and cons. Yeah, when when you have cash, you have more freedom to spend your money whatever you want. Yeah, but if you have digital cash or digital currency, you are going to be traced by anything that you do. Yeah, so that depends. So but anyway, so when you talk about this, um you need to compare that. You need to compare digital bills versus physical bill. What are the concerns about physical bills? Physical bills are has more cost because they need to be created, they need to be managed, they need to be transported, they need to be stored. So It could be stolen in the transport. They need security, physical security, I mean. But when you have digital bills, yeah, the government can avoid many of the costs related to physical bill. Yeah. So a government issued digital currency is equivalent to cash, but it is something digital. It's programmable. Yeah. It could redefine monetary policy and privacy. Yeah. Privacy can be a concern because all the things that we spend with our money are is going to be tracked. Yeah. So there are some things here. We haven't talked about stable coins yet, but here we have a comparable table of CBDCs versus stable coins. Okay, CBDCs are controlled by a bank. Stable coins are controlled by a private company. So yeah, it hasn't to do with the government. So when you see the parallel between those two technologies, it is very variable. Yeah, because for example, CBDC are the use case is replace cash payments, yeah, by digital. So in stable coins is to protect you about protect users about the volatility of other cryptocurrencies has. Yeah. So another use case is CBDC is to replace cash. Yeah, physical cash. So stable coins is to trading, hedge volatility, and we are going to with CBDCs we need to redefine the monetary policy and privacy because not all people are supposed to use the digital currency. So that needs a very long way in order that every people in the world uh, would be able to use CBDCs. Yeah. So I think that there is going to be a transition to do that, but it's equivalent to cash. So that's the future of cash, the money with relation in relation with the people and governments. So why do CBDCs exist? What are other advantages? For example, have you ever done a payment who has to have a cross-border transfer? For example, I know that many of you may know that we need the SWIFT, yeah, the famous traditional SWIFT for banking, yeah, and those traditional SWIFT takes 1 to 3 days to transfer, yeah, money from one bank to another bank, yeah. With CBDCs, this is going to change for seconds, yeah. So that's a very important performance issue that we have right now. So the other is financial inclusions. Bankless citizens can access digital money, for example. So not all the people are allowed to have the cash money, for example. So bankless citizens can access digital money without the need to have, for example, so an account in the bank. Yeah. So just a wallet. A wallet is something that every person can create. And the other is monetary control. Okay, I know that this has trade-off. Yeah, for the central banks track the money that they supply in real time. Yeah, it is very good, but for people is not so good that all the money that we spend, the government knows about all the spends that we are having. So yeah, that's open to regulation, but we'll see what happens in the future with this. Okay. So as we talk, CBDC's advantages are faster payments, lower costs, financial inclusion, monetary policy tools, transparency, resilience, innovation. We see that the advantages are really great, are very long. So for sure, we are going to have CBDCs in the near future. Yeah. Disadvantages. Privacy concerns, as we talked before, cybersecurity risk, bank disintermediation. For example, people may move money from banks to CBDCs, affecting bank stability. That happens with the cash right now, but it's not so easy to do it. The other is, for example, limited anonymity. Yeah, because yeah, the central banks or the government will will be will be know that we are spending anything in any, I don't know, properties, or they will know everything that we spent. So that's one of the advantages that we could have here. But the advantages versus disadvantages needs to be, uh, I don't know, regulated in order to have the best option for users and governments. Okay, summary for this. Okay, we can have speed, cost, lower cost, privacy is not is lowered because than physical cash. Physical cash gives more freedom. Control is good for central banks, but bad for individual. Inclusion is well designed, but security in theory is high, yeah, but it depends on how it is implemented. So let's talk about tokenomics. Tokenomics is something like protect uh, protect everyone from inflation. Yeah, if we have economic, yeah, for digital cash, for the cash that we have, there should be something that uh, in this case is called tokenomics for governance all the tokens that we are having right now. So what motivate users to hold or trade tokens? Is it utility, speculation, but who regulates that? Who governs all of this? So tokenomics is talking about the rules that governing a crypto, how they are created, how is the distribution, how is the value of that crypto. So how who can get that token, that it is money, or what are they used for. So in this case, tokenomics talk about those rules. Yeah, how all the governance is in charge of tokenomics. So the pillars of tokenomics could be categorized on these topics. For example, supply, utility, governance, and distribution. Yeah, these four pillars of tokenomics uh, are going to help us in resolving questions like how many tokens exist, what can the token be used for, who receives the tokens, and how are decisions made in the ecosystem. Here we have a comparison table. Okay, it's not worth it to read all of the table, but let's say that we have utility tokens, security tokens, and governance tokens. We have several um, rules of governance in all of these aspects. I mean, in purpose, in regulation, in value backing, and use cases, in legal complexity. So tokenomics talk about all of this because, for example, let's say about purpose. If we talk about purpose, the utility tokens, for example, grant access to products or services. What is utility of that? In security, does it represent ownership or investment? In governance tokens, for example, it grants voting rights in protocol decisions or whatever. Yeah. So regulation. Yeah. So all of these topics can be ruled by tokenomics. So you can share, you can look for yourself all of the aspect that tokenomics can be included, and this is the new economic, but based on tokens and blockchain. Yeah. So let's talk a little bit about stable coins. Uh, when we talk about that, is when you invest in cryptocurrencies is because you need something to trade. Yeah, the first the first stable coin that you need to invest in cryptocurrencies are stable coins. So stable coins is a way to protect the users of price volatility. Yeah, that's not an issue anymore because you have a stable coin. So it's like you have dollars, it's like you have euros. Yeah. So the most common currency for stable coins are the dollar. Yeah, but it is not the only one. It is the most common one. So you can have stable coins for dollar, but you can have a stable coins for euros or for any other strong coin. Yeah, or strong currency. But the dollar is the most common one. So in that way, you can hear about topics like Tether, that it is based on dollar, or USDC, it is based on dollar too. Yeah, and the store value for this is are dollars. Yeah, but there are other coins that are based, for example, in euros or yens or another currency. Common use case for this. In my case, for example, I use uh, stable coins for trading. Yeah, it acts as a stable medium to exchange on crypto platform. Yeah, you can't uh, join you can join in an exchange or in a platform, crypto platform, and exchange your own money, your own currency by other cryptos. You need to for example, to buy some stable coins and then you can trade. Yeah, is not the in cryptocurrency there are not dollars, there are not euros, there are not all of this currency. They need to be transformed in some stable coins in order to trade. Yeah, so remittances are cheaper and faster cross-border transfers, so you can send currency to another people, to another person in another country without all the yeah, for example, um, or without the fees that a bank can can cost. Yeah, in I don't know, in any transaction. For example, when you do a transfer from here to here, is is something that it is going to cost you. Okay, so for for finishing, because we are uh, finishing our time, let's see about what is the blockchain impact about what the things that we are talking right now. So when we talk about blockchain, the impact on finance, we can talk about disintermediation, decentralized finance, tokenization of assets, and stable skins and CBDCs. That's what we talk about today. Tokenization of assets. We didn't talk about that, but it's something very interesting point. Probably in another talk. So I don't know if there are any questions or anything that you want to know.
Yes, there are some, but I think we've got time only for the one.
Mhm.
Uh, Here it is.
Yeah, I know that physical cash is very rarely used nowadays. Yeah, at least I think that the incentive would be probably taxes. Yeah, but that depends of the government, of the rules that we have. Probably the tokenomics. Another thing is that CBDCs doesn't have to be on blockchain. Yeah, it doesn't need blockchain at all because it's central by a bank. So it go against blockchain. It can support on blockchain, but it is not it does not depends on blockchain.
All right. Andres, thank you so much for the
Thank you.
eye-opening look at the future of finance. Yeah, you've given us plenty of things to rethink, learn about money
Mhm.
and the control systems. Let's put hands together for Andres. Thank you so much for being with us here. Looking forward to seeing you here and with blockchain professionals once again. And thank you so much. Have a great one.
Okay, see you. See you all.